Hello, everyone, and thank you for tuning into the North Main Minute. I'm Joshua Doby. A question we're dealing with almost every day, especially with regards to the things that are happening around us, has to do with what's happening economically and then more pertinently, what's happening in the markets. Well, you've heard me say on a number of previous updates about where we are market-wise right now. We are, my metaphor that I just kind of made up on this end of things, we are in a washing machine a little bit. We're popping up and we're popping down, but we're really not going anywhere with any substance right now relative to our markets and even with regards to our overall economy. The primary reason for that right now is because of the Federal Reserve continuing to raise interest rates. And you may say, well, what does that have to do with everything else? Huge answer to that question. We're not going to touch on all the details here, but just know that as the Federal Reserve is raising and has raised interest rates so much here over the last 15 months or so, it's very hard for the markets overall to get an understanding about where that cycle is going to stop. And when they don't know where it's going to stop or where the terminal end of that end of things actually is, makes pricing for securities, stocks, bonds, etc. very, very challenging, if not completely impossible. And so that's why we have this almost washing machine style market right now, where we're not going higher, but we're not going lower relative to where we've been overall. Not true with every stock. There certainly are some that have gone way up and some that have gone way down. But when you look at the overall markets, really not a whole lot of movement at this point. Until we get to the end of that cycle, we're probably not going to be getting anywhere with any substance. That's our opinion here at North Main Financial Group. That being said, the Federal Reserve has indicated we may be getting close to the end of this raising cycle, perhaps another raise or two that's sitting out there. That's starting to be the talk that we're hearing from the Federal Reserve, so that may be the case. Markets probably are going to start to get a little bit more settled and confident in their pricing models again as we get to that point, but that process usually takes 3 to 6 months at least when you look at it in historical terms, in terms of the market getting settled and comfortable again with where the overall rates are going to be. So stay tuned on that. That's something obviously that we watch literally every single day in understanding where things are, and certainly with regards to how it affects portfolios and our overall financial plans for clients. If you'd like to reach out to us at North Main Financial Group, perhaps talk about the economy. How does it apply to your portfolio? Is there any material impact about which you need to be aware? Is it prudent to make tweaks or not? We'd love to hear from you, northmainfinancial.com.